Welcome. This is Power Trading Radio Live. Power Trading Radio Live, fueled by Online Trading Academy. For more information on the show, visit us online at powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. Merlin Rothfeld with you for your, are we on TJ Wednesday? Right, it was tacos and a horrible round of trivia from me last night. So hopefully you guys did better than we did at trivia. 7th place, not my favorite. A little bit of a show change today. I've been trying to get a hold of Russ Allen. I can't seem to get a hold of him. The beauty of doing a live show. So we may not have Russ Allen on today's program. I'm pretty sure we aren't, so I apologize for that one. It's tough to get these guys to come on with regularity, and sometimes they just bail on me, which means I get to talk a lot more today. So if you have specific questions, comments, suggestions, let us know. Send it on in at powertradingradio.com and click the little Power Blast button there to get those questions on into us. And if you are just watching these videos for the first time on YouTube, if you're watching them live, interact and chat with everybody that's here on social media. If not, you can actually ask your questions down below in the comments section below the YouTube video, and I will get to those on tomorrow's show. Hopefully get them to them on tomorrow's show. Comments, questions, suggestions, whatever you like. All right, TJ, start us off. Let's go from worst to first. And when I say worst, it was actually good because everything, at least our top 7 we look at today, was all positive. Nice little about face out there, which seems to be par for the norm or par for the course. The new normal is we have a big down day, then we have a nice big up day. And if that's any pattern, tomorrow will probably be a down day based off that thing we've seen over here over the past couple months. All right, worst performer, 0.04% gain. I'm going to call it pretty much unchanged. That's right, crude oil. TJ has crude oil on the chart, and you can see for the better part of 5 sessions, really hasn't done much. I'm going to have him put a little horizontal line right on the consolidation area, TJ. That means right above where it's been just sitting. And I kind of want to keep an eye between our opening and closing prices for the last 5 days on crude oil. And you see these 2 little lines. It's really been stuck between, looks to be about 52.32 and 52.83. So you're looking at a 50-cent range. So yes, it has some spikes up and down above those numbers, but the opening and closing prices all are within that little 50-cent window. That's a great sign of compression, a little bit of hesitation. Of course, some would argue that we are near some demand levels, which may be why it's hesitating. I think it's just because it's been on such a roller coaster ride over the past couple of weeks after the Saudi Arabia incident. All in all, not a bad day. I mean, it did give back some of its gains. It was up near that $54 mark, but dropped all the way back down to $52.65, ending the day up just 2 cents. That's right, 0.02. It's actually down a little bit in the after-hours session, but it was still a gain of 0.04%. All right, number 6 is gold. Here is your GC on the day. Gold was up 0.46%, so you can see technically it's nothing special. It's right back up to kind of this little downward sloping trend line. TJ, because he loves his trend lines and thinks he's a really great artist, he'll probably draw a line on there for us. Thank you, TJ, my chart master. We are still kind of making this series of lower highs going back into early September. So today's move up, nothing special, although it was a gain of 0.46%. So anybody who's holding gold long, like myself, who owns gold coins, certainly would like to see that. Right now, gold is trading at $15.1080. That's a gain of almost $7 per ounce. All right, let's start the indexes. Russell 2000 bringing up the 5th place spot, up 0.07, beating just ever so slightly, beating out gold to the upside. Technically, again, this one really doesn't look anything special. It's sitting right near the lower end of its range for the better part of 6 to 8 months. Russell on the day was up 0.47, almost a 7-point move to 1,479. All right. S&P, doubling the gains of the Russell. We were up 0.91% for the S&P, even though technically it doesn't look like anything special, right? We have just been kind of consolidating. We'll see if this continues and for how long. 26 point to the upside, 2,919 is what we saw the S&P finish at today, which was just narrowly missing the podium. The podium is full of 1%ers today. That's right, well, plus 1%ers. NASDAQ Composite starts things off, so TJ will bring up the NQ, which finished at 77.02. The NASDAQ Composite was at 79.03. That's a gain of 1.02%. Technically, it's actually probably frustrating for many of you because it's really consolidating. The ranges are getting tighter. We can bring up ATR if you want just to show you what that looks like, and you're going to see ATR has been drifting down. It was up a pretty good amount, but now you're looking at ATR. That's roughly, what do we got in the current one? Right around 144. So 144 points a day move on the NASDAQ. This is, that's right. Yeah, this is NASDAQ. Thank you. NASDAQ 100, but it's just shrinking. Notice back in 2019, we had some huge ranges which were significantly higher during this bull rally. Now all of a sudden they're starting to shrink down. Even though the moves are big, right? You do see good up and downside moves with the NASDAQ and with our market, percentage-wise per day. All in all, it really is just traversing sideways. All right, that was number 3, your bronze medal. Back to the treasuries. We'll go to the ZN on the day. That 10-year yield had a pretty good pop today. You would think this should put it in first place, but oh no. It was up 3.38%. That brought the 10-year yield to 1.589er. I don't know. I feel like we should take a little bit of a poll here and see how many think this is going to break through these most recent highs. TJ will draw a horizontal line just because he loves to draw lines on charts. That's what he does. We'll put that at 132, 138. That little blue line there, I don't know. I'm actually thinking you're probably going to end up breaking that to the upside here. It just feels like the trend is your friend. So big red candle today because we saw those yields spike. I think that the more that the Fed is unwinding and doing these big auctions, I think you'll probably see those yields drop, which would in turn push this ZN to the high side and make it break that high. All right, last one. Going to cryptos. Bitcoin was your big leader on the day, and of course all of it happening in the wee hours of the morning here. 8,550 is where we saw for Bitcoin. That's a gain of 5%, $418 per coin. So for those of you Bitcoin bulls, which I am among those, we're enjoying a nice pop today, although I'd rather see it up at the $13,000 mark that we were at just a few months ago. So all in all, that's pretty good. Some of you wanted to see the different prices of different cryptos, so I thought I would just throw this. Bitcoin is probably the better performer, although you see Ethereum is up 6.5%. Here are some of the other major names out there. Chainlink, which I think one of our viewers is a big Chain fan. I'm a Dash fan personally, and that was up 3% today. And there you go, a bunch of other ones. Okay, that will do it for our top 7 markets out there. Hopefully you made money in one of those bad boys. I actually lost a little bit of money today, but we'll leave it at that. Okay. What did I want to go into, TJ? You had some charts, and I'm going to go and talk about some of these. So we asked you, how many of you would like to see more charts, or at least when I talk about the charting, you want to see the visuals. Because I'll mention a number like, oh, well, CPI came out this number today, and blah, blah, blah. And almost every one of you said that you'd like to see more charts to visually support that. So those of you on the treadmill at the gym right now listening to the podcast and can't see it, sorry. Makes it a little bit challenging, but I will start to incorporate this into the show a little bit more just so you can see the trends, because if I were to tell you that the Syntex investor confidence number came out much worse than expectations at negative 16.8, you'd probably shrug your shoulders and say, I don't even know what that means. So the Syntex investor confidence numbers, which is this chart here, you can see, let's blow that one up for our viewers. I know it's kind of hard to see. What they do is they do a survey of about 2,800 investors and analysts in the financial marketplace, right? So you'll notice the trend. Blow that one up full screen, TJ. Thank you. This 2,800, which is predominantly a Eurozone base, it's a European measurement of the level of economic activity and outlook from an economic perspective for the Eurozone going for the next 6 months. And what was interesting, and John O'Donnell did some great new charts of the week, so I'd encourage you to check those out as he posts those. But it's showing an overall decline, not just in investor confidence, but in manufacturing and production. And it looks like a significant slowdown, really starting in 2018 in January. Now, this Syntex investor confidence, let's be honest, this is investors and analysts who are probably going to be more retail-based and influenced by retail news. Still doesn't change the fact that you're seeing a pretty significant shift. Now, the last time we had a drop below that was 2014. We saw a pretty significant one in 2012, and of course the big one back in 2008 going into 2009. So wanted to show you that one here just so you get an idea of the trend. It's been a pretty aggressive sell-off, not quite as aggressive as what we saw in 2007. But don't you find it interesting? The consumer confidence fell so quickly back here in 2007, right? It was almost a free fall. We were up, I probably don't have the exact numbers, but it looks like it's close to about 40 on Syntex investor confidence. And within the next, call it 6 to 8 months, we were at 0. That means that all of a sudden, extreme change in sentiment, and then we dropped all the way down to looks to be like close to negative 50 by 2009. So in 18 months, you went from plus 40 all the way down to negative 50. That's a huge swing. The one we're seeing now is obviously not as pronounced. It is pretty consistent. But remember, look what happened back where TJ is moving his cursor around. You could probably use a highlight box here, but we don't have it set up. Back in that 2007-8, you remember the media was very negative. Everyone was just ripping on the fallout of the housing market, right? Talking about financial system under stress and potentially collapsing. Now, I don't think we hear that same talk today, but I'll tell you what, if the investor confidence numbers are declining this quickly, I don't know whether, one of two things comes to mind. either we are not being told about some things that these analysts and investors are seeing, or we are overreacting to it, because most of the economic data isn't that bad. You know, it's not appallingly bad like we saw in 2008. So wanted to share that chart with you. I thought you guys might find that one interesting. Also, Alex, thank you for this question. Alex wanted to know about crude oil. I always like to make fun of crude oil inventories. It's one of my favorite things. I think it's the best job to have would be some analyst that estimates how many crude oil what the crude oil inventories will be. You know, I think if we ever to bring back the gold coin contest, for those of you who might have been Power Trading Radio viewers, I don't know, how long ago was that, TJ? That was the old building. That was that like 5 years ago we did the gold coin contest? It seems like so long ago. What we did is we did a contest where every Friday by, I think it was 1 o'clock, you had to go to this website and submit what you think the spot price of gold will be by next Friday. And whoever got the closest would win a gold coin. I thought it was a great contest. Well, man, I think we should just have some fun, and maybe we do it for the price, or the crude oil inventory numbers, because it comes out once a month, and whoever gets the closest number should win some prize, because it is, you could just really just throw a dart and guess at it, and it's just pure luck. At least with gold, you can do some technical analysis. Anyway, Alex's question was really saying, can you show me how crude oil inventories might impact crude oil? So I thought, okay, I will task TJ, who just sits there and looks at the Lakers and Warriors stats all day, or not Warriors, Lakers and the Raiders stats all day, because he's a sports nut. I wanted to bring that one up. So let's take a peek at crude oil inventories. You'll notice extreme volatility with regard to these inventory numbers. What are we looking at exactly on this chart? This is a breakdown of what the actual numbers were versus expectations. TJ, is that a gold bar? The little horizontal slash, that gold? I can't tell colors. So you got blue, and then what's the other color? There's a gold? He's nodding at me, gold. So the little horizontal gold slash marks tell you what the estimates were. So this is what the analysts were expecting the inventory numbers to be. You notice it seems to be fairly smooth and consistent, where the actual results are these blue bars. And notice almost every single one, it's a complete blowout of numbers. If you're looking here at crude oil inventories that just came out today, the expectations were that we were going to see inventories increase by 1.8 million barrels. We actually came out at 2.9. That means they were off by 1.1 million barrels, which is just colossal to me. Anyway, that's the chart of crude oil, and I only did it, crude oil inventories, excuse me. I only did it to 2019. And why I thought this might be kind of fun is I had TJ take the chart of crude oil for that exact period of time and slap it on top of that just to see what that relationship looked like. So there you go. Thanks for slapping it on top there, TJ. I don't see anything that really screams to me of very tight correlations. Now, keep in mind, these numbers come out once a month, okay? Once a week. Sorry, this is weekly here. So what I do notice is there's generally a reaction that day. So, of course, today is Wednesday. Crude oil inventories came out this morning. There's generally a reaction that day. But it's not, when you plot the charts like this, it's probably not the best thing to do. You know, you did see here the prices. I think the most notable one is right here. I don't have the dates at the bottom, but you can see that crude oil definitely had a nice move up. Well, it's because inventories were being depleted. You can see these blue bars. A significant decline in inventories caused that little bit of a pop there, but it was quickly remedied, and now we're back to a situation where you can see we have positive inventories, and crude oil has been dropping pretty steadily. So, Alex, thank you so much for that one. Hopefully that gave you a little bit more insight. I love doing this type of stuff, so if there's something that you guys would like to see, we'll task our team here. Right now we're getting ready for the international conference that we hold every year for Online Trading Academy as a company, and we're pretty excited about that, but it takes up a lot of resources, so I might not be able to do all of the suggestions that you guys come up with on the show on a regular basis. But Alex, I saw this one today. I always look at crude oil inventories. I think it's a critical one, at least for the day that it comes out. Of course, you know, crude oil inventory data, is that going to impact Friday's trading? Probably not so much, but it certainly impacts the day that it's released. So thank you for that question, and keep them coming, guys. We love this type of stuff when you send in questions showing data or visuals or a topic that we don't normally cover, because I've been doing the show almost a decade. It gets a little bit redundant for me sometimes going over material, so love to have the fresh perspectives. All right, that will do it for this segment. What we're going to do is we're going to take a quick break. When we come back, I will not have a guest on the show today. I'm going to talk about, I don't know, whatever listener questions you have. I got a few here that I will try to get into. I got a question on Hyatt, which I apologize, Trent. I didn't get to that question in time, and of course, it already hit your level. And I also have one from Carol in Houston. wants to know about fees, so I'll address that as well. If you have any questions, feel free to send them on in. PowerTradingRadio.com. Click the Power Blast button, or go to our YouTube channels. We're broadcasting on our Online Trading Academy as well as Power Trading Radio's YouTube channel. Say hello to everybody out there. Be amicable. Ask questions, and I will be right back.
It's just very gratifying, and the benefits of traveling and getting to share my knowledge, and really seeing a student, on Saturday morning, a little trepidation, a little nervousness, and then by Thursday and Friday, they're just following the process, clicking buttons, trading, first at Sim, then live, and it's just tremendously gratifying. So I'm looking forward to the next 10 years.
Trading can be a lonely career, right? Especially if you're just sitting in your basement by yourself, typing away on a keyboard. So I needed an outlet, and I'm able to come and connect and share what I've really enjoyed, and it's helped me. And so there's part of that's the giving back, and I really enjoy that. And if I can make a difference in somebody's life, that's a pretty awesome thing.
Seeing students start out, well, I'm not sure, I'm not quite sure, I'm nervous, and to be able to give them the confidence throughout the week where they feel that they finally can do what they want to do, and that they know that I'm there, that Online Trading Academy is there for them to hold their hand, help them out anytime they want to be. To me, that's the best possible thing you can do.
For me, I wanted a way to be able to give back. Naturally, I've learned something at such a young age that this is a skill that I can use for my entire life. So being able to give back to other students who are going through that same journey, that's something that to me means a lot, and that it's a pleasure to be able to do every day.
Welcome back to Power Trading Radio Live, and your host, Merlin Rothfeld, with today's special guest.
Hello, everybody. Welcome back to Power Trading Radio. It is your Wednesday edition. Yes, I did say crude oil inventories are reported every month. That's wrong. It was a quick one. Most of these reports are monthly, but crude oil inventories, natural gas storage, those are every week. Those are weekly announcements. Apologize if I threw you guys off there. Yes, I make mistakes sometimes. It happens. Look, come on. You got the beauty of a live show. I would actually love to turn the camera on and show you that there's no teleprompter here today, just so you can see that I make mistakes. Fink, welcome, my friend from the Southern Hemisphere. It's probably the wee hours of the morning down there in Australia. Hope you're doing well. He says, what are your thoughts on the Dow Jones Transportation Index? And then Scamble falls right back up, said, yeah, we should add the transportation average to the front of the show run-up. I'm torn. While I agree with you, I feel like there's other things we could look at to gain a perspective of what's going on in the overall market. I am a big fan of the transportation index because, to me, transportation is a sign of how well the economy is doing, right? If transportation, both shipping, rail, freight, whatever, is declining, that's obviously a sign that businesses are not consuming or not shipping as much as they were. So I think transportation index is a great thing to look at. The conundrum is this. I'm trying to make a show, or I'm trying to make a show that's for the viewers. It's not really about what I want to talk about every day. I'm trying to give you guys information that you would find beneficial, that you'd find entertaining, and like coming back and sharing with your friends, which thank you guys that join us regularly. The challenge is I have one group of people who says, Merlin, you spend the first 8-9 minutes of the show going over stuff that I could have picked up from CNBC, and I find it really boring. Well, I try to add a little bit better perspective and give you a little bit of salt and pepper seasoning on that one, maybe a little bit of garlic salt on there too, just to give you my perspective on it, to make it, not so boring and dry like you would find on any of these major news networks, because they just usually read a number and move on. I'd like to know, is it strong, is it weak, what do I see happening here from a supply-demand perspective and trends, et cetera. So I try to do it a little bit different, but I don't want to go too long, right? I don't want to take the opening segment and go for a full 10 or maybe even stretch out and do 15 and cover 18 different things. So if I was to throw in transportations, I'm not saying we're not going to. Right now, our top 7, I really want to keep it at 7 things. It's just manageable for me. We have one cryptocurrency. I feel like that is a good thing. We have the 10-year now, which it was a new addition. I like that. I think that that's a good one because now you have a sense of the bond markets, that interest rates. So we're already into 2 market segments, interest rates and cryptos. We do have 3 indexes, NASDAQ, S&P, and Russell. So that might be a little heavy. We already got rid of the Dow. And then we have gold and crude oil, so we got 2 commodities in there. I feel like that's a pretty good mix. I would be open to removing either the NASDAQ or the Russell from our top 7. S&P, sorry folks, I'll veto it. I'm the president of that club. I'm keeping S&P in there. So I want to make sure I keep Bitcoin, the 10-year S&P, gold, and crude oil. I've got those 5. I could see replacing, if you wanted to. Now, I want to make sure that this is a democratic thing here, and I want to go out there. I'm not trying to sway anybody's decision. But if you wanted to, would you want to see the transportation index put into this top 7? And if you did, you got to tell me which one you want to get rid of, right? It's like that old pair of shoes in the closet. If you want to get a new pair, you got to get rid of one of the old ones. And it's tough. I tell you, I don't know which one I'd want to get rid of. If you told me I had to get rid of the NASDAQ or the Russell, oh, man, I really would have a hard time with that one. I like all 3 of those. Remember, I think S&P is the dog that wags the tail, right? I think that we have to have that. That's the overall market. The Russell and the NASDAQ are 2 very different things, right? The NASDAQ, to me, represents a lot of biotech and technology, which is obviously very important to know since a lot of my trades are done in the tech market. The Russell 2000 actually is companies that I don't trade. I don't really trade small cap or mid, I don't trade small cap companies. So for me as a trader, Russell would probably be the one that I would say let's remove it because I'm not really trading those securities. However, I love using the Russell 2000 to see any divergences between the other indexes. So I'm torn out there. You guys got to let me know. Let me know through chat or through Power Blast what you think. I am open to the suggestion, but I need to see a preponderance of support for removing either the NASDAQ or the Russell and replacing it with the transportation index. But I am open to the suggestions. You guys now get to start that discussion and keep it rolling. All right, let me know. Dunkster, you said, what is ATR? ATR stands for average true range. It basically tells you how much is something moving in a set period of time. And this is really important. Do I have time to do some drawing, TJ? Well, you know what? It's my show. I guess I'm going to do some drawing. Bear with me as I draw a little. I'm going to do some fun for you guys. We'll see if I can do this live. I know it's going to be messy. Let's go File, create a new one, TJ. I want you to make it all white. And then we're going to do a drawing exercise here in PowerPoint. So let's make that full screen so I can torture the audience with my drawing skills. I apologize. I know some of you are going to be like, oh my God, I didn't come on the show to watch this today. But you are going to get it now. So let's say right in the center of this screen, I'm going to put a little dot. That's not a dot. Let's put a dot, TJ. I want a dot right in the middle. Okay. So that dot is a stake in the front yard, right? It's nailed into the stake in the ground in this front yard. And there is the nastiest, meanest looking dog. Oh boy, TJ, can you draw a dog for me? Let's just do some gnarly little teeth there. Oh, boy, this is going to be ugly. So there's his lower jaw. We'll make his leg. There's his front legs. We'll make him gender neutral, so don't worry. There's his tail. Oh, look at that. Artistry. How about some ears, TJ? So make him a little eyeball. And there's his teeth. Not too bad, TJ. That's supposed to be a dog, folks. Apologize for the artwork, but that's supposed to be a dog. Oh, okay. So let's say this is the meanest, nastiest dog that you've ever seen. And he's tethered to that stake in the front yard, right? So he's got a leash, and that leash goes right from the center of that stake to this dog's collar. So you can see he's leashed up. So what that tells you is that dog now has a range. And we'll put it, I'm going to try to draw this about as good as I can. I apologize. I know this is on the fly live graphics, which is not going to be the best. We will make no fill on that shape, TJ. So there you go. So let's say that is the range, right? It's the distance that dog can travel from that stake in a perfect circle for you geometry buffs out there. We're kind of going into one of those Leonardo da Vinci kind of paintings. Where's the naked guy standing on a big cross? Here you have that range. Okay, why is this important? Because if you were to be standing somewhere, where would you want to be? You don't want to be standing very close to this. So I will actually add on a little icon here for you guys, which I'm going to save everybody time and effort and peace of mind. We probably could have done this at the very beginning, TJ. I appreciate you doing this stuff on the fly for me and showing me your art skills. But let's say that you are standing right in this front yard. So we'll add an individual in there, and I also want to add in, go back and put a real dog since my dog is pretty ugly looking. Or maybe not. Okay, there, we'll add this dog. So you look at these two things here. I have now the human and the dog. Okay, much better. Where do you want to be standing? Would you rather be inside this circle right there? If you do, you are susceptible to being attacked. So let's. Oh, look at that leash. It stretches. Now, where would I rather position myself? What are the odds of being hit or bitten by that dog? It would be if it was there. I would be. And Scammell says it's a dinosaur. Well, you try drawing with a mouse, buddy. if you were to move outside of that range, all we're doing is saying, I want to make sure that the odds of me being attacked by this dog go down as low as possible. So if I know that range, then I can put myself outside of it. Think of the stock market as the same way. This security that you have moves a certain amount every day, and during the period of the day will change. Maybe it's moving 10 cents an hour, or maybe it's moving $1 an hour. It changes. So if we pay attention to ATR, it'll tell you how long that leash is or what the range of this dog is. So let's say one day I walk by and his distance is here, but the next day it's there. Well, I just need to adjust where I'm at so I can put myself just beyond that dog. What does this have anything to do with stocks or trading? It has a lot to do with it, because if we look at these charts, this security is moving a certain amount every day. So let's go back to the S&P 500, for example. Here is your ES, right? We can click on the ATR button. Click, it's awesome. We use it a lot, so it's right there on the platform. Right now, the ATR for this guy is roughly 43 points. So in one day, it's moving about 43 points. So if I'm using a daily chart of the S&P and my stop loss is 5 points on the S&P, I'm crazy, right? Because it's moving 43. My odds of being stopped out are significantly. Brandon, you walked into this one at the wrong time. So what we could do is we can also go and say, if I'm a shorter term intraday trader, let's say I'm using a 5-minute chart, I can now use ATR as well, and it tells me that this thing's moving about 2.36 points every 5 minutes. So I can adjust my stops, I can tailor my setups, my entry, my stop loss, and my price target, understanding how ATR, or how to use it. Now, I'm not going to go the specifics of exactly how we would use it, but since Dunkster asked what that was for, I wanted to show you. I'm being mocked by people in my preschool art class. I challenge all of you to try to draw with a mouse live in front of a studio audience. All right. Thank you, Dunkster, for that one. I appreciate it. So hopefully my example, Dunkster, did my example at least make sense? Huh? And Scamble, just the fun that you experience on Power Trading Radio, right? The beauty of knowing that we're all part of some wacko little community. That's awesome. Cool. All right. Well, hopefully that helped you, Dunkster. Add Dow transportation once a week. All right. I got junkyard dogs. Yeah, I know. Catman, welcome back. I saw M Cat and I was like, I forgot, was that you? But no, David is Catman and we got M is Catwoman. So good to have you back out there. Catman says weather forecast is a little more refined versus the oil inventory forecast. Yeah, and they're more accurate. Man, I just have no clue how these guys can be so colossally wrong on their analysis of markets. It absolutely boggles my mind. Okay, let me go back to some more questions out there. All right, so I did that one. Let's go to Everest. Okay, this is a good one. Yesterday, we had a conversation about deflation of prices, and this is an interesting one. I am like many of you who are skeptical and don't really trust any of these reporting agencies, the Bureau of Labor Statistics, all these. I don't know if I believe the data that comes from them, simply because I think it was 5-6 years ago, we interviewed a guy who used to work at the Bureau of Labor Statistics, and he told us that they do, in fact, cook the books and change data that goes into these reports to benefit a specific political agenda. And I'm just going, well, how the heck are we supposed to trust the data? Because my decisions are made off of the health of the economy from a long-term perspective. So Everest says, deflation my butt. They don't live in California. Just pumping gas went up significantly this week with the new tax legislation on gas compared to other states. Don't believe those deflation numbers until you see more funds in your bank account without any changes to your regular budget. I believe that inflation is there. I believe it's way higher than we're experiencing. What I tried to do today, and I'm going to have to do more work on this because it's not an easy metric to make. Producer price index and consumer price index basically measures this basket of goods and services, but there's multiple levels from raw to refined to deliverables, so that it's a pretty broad report. The question I have is, what are they actually measuring? And I've used this example before, Red Stripe. I actually like Red Stripe beer, right? Who doesn't like a nice Jamaican beer? Well, it's an 11.2 bottle, 11.2 ounce bottle. A bottle of beer should be how many ounces? 12 ounces. So you've basically taken away a weighting, a portion. So instead of the price going up, price stays exactly the same. So the inflationary number, no big deal, right? A bottle of beer is still a bottle of beer and price hasn't changed, but they've actually put less in it. To me, That's inflation. I remember orange juice used to be in 64-ounce cartons in the grocery store. Go to your grocery store right now, they're 58. Price might have remained the same, but they're removing the contents. They're shrinking the contents of it. So, I agree, Everest. I believe that inflation is there, but the indicators that we look at, the ones that the government are telling us to look at, are not showing inflation, which, of course, I would disagree. I think that inflation is there. It's just, if I sell you something and the price never changes, but I keep putting less and less and less as a deliverable to you, to me, that's inflation at its finest. All right. So yes, Everest, I believe it's there. And of course, we're California. We're the worst with regards to gas, which is why we have so many NGVs. I was going to go to a commercial break, but I'm not going to. I'm going to keep on rolling. Carol out in Houston. We mentioned this a bit on the show in the past, and it's a tricky one. I'm actually working on a webinar, which we're going to do, I believe it's going to be October 30th. I'll let you know more about that one in a bit. Want to make sure we have it all set and ready to go and confirm before I go and do it. So, the webinar is going to address some of this, which is fees. Now, it says, I've been following your show for a while and have moved my investments to no-load funds. What other ways can I cut fees? It's a great question. It's something you have to think about. We were, in the webinar, one of the examples I'm going to show you goes through, what if you put in the current number maximum into your retirement account every year? So let's say you're in an IRA and you are under a certain income threshold. You can put in $5,500 per year. And assuming that you put in $5,500 per year, and I apologize, these numbers might be slightly off. I'm just trying to test my brain here. This is a tough one. If I put in $5,500 on, let's say, January 1st, right? By the end of the year, it goes to $5,900, assuming that we have 8% rate of return, which since the 1950s, this seems about right. So we get that 8% rate of return. At the end of 30 years, assuming at a 0.2%, 0.2, that's reasonable, right? That's an ETF, exchange traded fund. You would be receiving about $690,000 in that account, or that account would grow to $690,000. If you simply had a 2% fee, it drops to like $440,000. So all of a sudden, you lose almost $200,000 simply because of a 2% change in interest. If you're at 5% fees, you're down to like $200,000. That's $400,000 goes to the institutions that were charging you the fees. Crazy. So step number one, I think you've done the right thing. You've gone to no-load funds. Now, here's a caveat with that. Many of you might be buying into no-load funds. What is a load? It's an incentive for you to not move your money because these mutual funds want you to keep your money with them. So what they will do, what they used to do, and they shouldn't do this anymore, it's a sucker play. When you buy, they will charge you a front-end load, meaning it's a privilege to buy into this fund. Sometimes it was up to 5%. So 5% just to buy in, or a back-end load of, let's say, 2, 3, 4, 5%. A front-end load you pay up front. A back-end load you pay when you sell your shares to that mutual fund. Of course, you can buy a market index that would beat a mutual fund, so why would you ever buy a mutual fund? However, some of you may be forced to buy mutual funds. Okay. If you are, then obviously you want something that's no load. But there's an asterisk there because what some will do is they jack up their other fees. So with a mutual fund, you have 12B1, which is sales administration fees. You have a management fee. There's a couple other ones, but they're generally rather small. And then you have the load fees. So step number one, what you've done is right, Carol. Remove those loads, the heavy fees on the front or the back end. What other ways can you cut? 12B1s are pretty low. You're not going to usually see those up at 1%, but management fees might be higher. So a specific mutual fund may actually have a 1 or 2% fee in there. How can we get around that? Look, if you buy I'm going to make up a trading firm. So let's call it Rothfeld Investments Select Grade Growth Stocks. You're like, what the hell does that mean? I don't know. Look, all I'm going to do is buy pretty much the components of the S&P 500. And then I'm going to charge you fees for that because I have huge inventory. I've got a bunch of workers I need to pay. I've got buildings. I got overheads. I got taxes. I got all this stuff. I'm charging you to pay for all that plus my 6, maybe 7-figure salary. I don't need to charge you much because the more people I can convince to buy my garbage investments, the more I make. So why bother? Why bother putting these guys in Bentleys and Ferraris for doing nothing? They're actually taking money away from you by charging you that 2, 3, 4, 5%. So Carol, step one was great. If you can, I would encourage you to go to an ETF, an exchange-traded fund. You could buy the SPY, okay? So let's say you wanted to just buy, you're a buy and hold investor, and you bought SPY. It has a 0.09% fee. you're not going to find something that has 100% zero fees. There's going to be a little something out there. I know, just the way the market works, if you want to buy a basket of securities. So you can go for SPY, DIA, that's the Dow Jones Industrial Average. You have the IWM, which is the Russell. You've got QQQ, which is the NASDAQ 100. You could buy that basket of securities, and it will probably, I say probably, outperform those mutual funds that you are in that are mimicking a market. It's crazy how these mutual funds do. So if you want to save even more, probably want to go to ETFs. The third component in there is let's do market timing, right? So let's be careful about when we buy or sell here, because a lot of people are flooding the markets right now to buy, and we're at all-time highs in the market, which is a scary situation to be in. Even though I do feel we might see another pop to the upside, the odds are greater that we're going to see in the next 18 months a much bigger pullback. That's just the way the markets move. So glad you took that first step. What I like to do is I like to create spreadsheets. I'm a spreadsheet junkie. And Carol, it's probably great for you and be a relief for you just to go and see how much money you would save. Not this year, but in, let's say, 10 or 15 or 20 years with regards to how much money you'd be saving on those fees. Brendan says, I'm hoping for Black Monday. You and me both. If you look what happened right now on the S&P 500, I don't know if you guys are catching this. As we speak right now, the S&P is getting absolutely murdered. Like slaughtered right now. It's just fallen 30 points in 10 minutes while we've been doing this. So there you guys go. You want to talk about Black Monday, you might get a Black Thursday. There's your short side right now, really tanking as we come out of the rollover. Huge downside move here. This is the S&P. If you want to see what's looking like on the NASDAQ, I'll bring up, there's the Russell, which should also be following suit. I mean, we've given back every single thing that we gained today in under 10 minutes. And we are now below the lows for this week. Let's go back to the daily, TJ, just so we can see where we are, because this is breaking news. You're seeing a pretty significant sell-off in the new session. It's not showing there. Let me go back to the 15. I don't know why it's not showing on that chart right there, but there you go. That's ugly. So the S&P is actually right down to the lows of yesterday right now as we speak. So you might get it. I'm hoping for it too. We should have. Hey, on Scamble, have you ever seen my dog? I bring him on the show every now and again. How do financial advisors get paid? In many different ways. And most of the time, it's going to be under assets under management. They also get perks for selling specific securities. This is why I did not want to be a broker. I think I've told you guys this story before. When I was in college, I ran a financial management organization, and we would bring in CEOs and CFOs just to see what jobs are out there. I don't know what to expect. I just want to make money. And this one guy walked in. He was from Bank of America. I remember that. He had on a Prada suit. He's got his Ferrari keychain. He's decked to the nines, right? He was basically, let me flash my money to you. He's perfect for an LA nightclub. And sorry, Brendan. Sorry, Ruben. I know the LA nightclub scene was a low blow there. But if you look at what he was doing, basically what he said is he'd come in the morning, he sits down with the traders, and they have a sheet that they hand out. And it would basically script what he was supposed to say to his customers. So I'm just making this up right now, but it would say like Dell on this sheet, and it'd have like a little palm tree next to Dell. If he sold, let's say, 10,000 shares of Dell, he would get a trip to Hawaii. So what do you think he's going to sell? He's going to call you up and be like, hi, Mr. Rothfeld. Yeah, this is Ken with Bank of America. We think that you should be looking to buy Dell right now. And he's literally reading a script. It says, Dell has got strong earnings growth, and we think that their management is in an excellent position for growth for the future. We think it's a great time to buy. And you're like, oh, okay, buy me 1,000 shares. Okay, great. All right, buy you 1,000 shares. So two things happen. How am I making money on that one? Number one, the trading firm is going to buy you at retail prices where they've probably already bought a bunch of it at a lower price. So they're going to buy a bunch of it. As that price starts to move up because people are buying it and they're encouraging those people to buy it, they will make the difference between what they bought it at and what they sold at. They are basically creating demand to push prices up. That's one way they get it. Number two, they're going to be charging you commissions on that transaction. So assets under management is a big one because that's how the company is valued, right? A lot of the valuations of big trading firms is assets under management, AUM. That's what they want. Right now, that's what's happening with these trading firms like Charles Schwab, Ameritrade, E-Trade. They're getting crushed because their business was predicated off of commissions, but mainly what they want is assets under management. That's where they really make their money. All right. Okay. Well, there we go. So you know what? Let's go straight through, TJ. I want to just kind of keep on rolling. Any last minute ones? Let me check out the Online Trading Academy YouTube page. Positive move, RTY, futures, different sectors weekly. Okay, I could see that, Ruben. Not a bad idea. Hold on, Pepe. You're telling me that the China-U.S. trade negotiations stalled? No, say it ain't so. It probably is. Who knows? I don't watch Donald Trump's Twitter feed, but my guess is it's probably stemming from that somewhere. All right, that will do it for this one. I'm going to check our Power Blast because I always encourage you guys to send in Power Blasts, and I haven't even looked at those today. I apologize. Of course, now I have a whole bunch of those to go through. Go to the Dixie. Okay, that's interesting. Brian says the dollar index, so that could be another candidate. I may actually run a poll here in the next week or two just to see because I would not. Don says transports, no. Okay, no, I have a no to transports. Dump the Russell. Big Eb says get rid of the Russell. I have some thinking to do out here, guys. That's a tricky one. Okay. Well, cool. That's what SP Newsfeed said. Let's go to our earnings calendar, TJ. Bring that one up here since I'm going to keep on trying to read questions out of the corner of my eye, and it's going to make this show sound really weird. So we will go to our Thursday performance. We had producer price index numbers, guys, which were supposed to or should show inflationary pressure. We had Bill Addis on the program yesterday. You have a huge amount of money supply increase. You have a trade war going on. Prices should be going up, but they're not, which is interesting. That was the producer side of it. Now, the consumer side should generally be pretty darn close to that. There shouldn't be a big separation. We actually saw PPI come in at negative 0.3%, meaning it's actually prices were actually dropping. That's why the comment came in about deflation with regards to prices. Tomorrow we have consumer price index, which is what you and I are paying for that same basket of goods and services. We also have unemployment claims, natural gas storage, which like crude oil is a weekly report. We have goods trade balance. For the euro, you're looking at ECB monetary policy meeting accounts. British pound has GDP and manufacturing production. New Zealand has business manufacturing index and producer price index also coming out for Japan. Earnings, kind of boring. We've got The Buckle, another overpriced clothing store. Alfrea, Repay Holdings, Vox International, and that will do it for your earnings calendar for tomorrow. All right, for tomorrow's show, we've got LJ, Puppet Master, Larry Jacobson. We still haven't decided when we're going to do a sock puppet show, but Larry Jacobson will be talking big picture with me. I had an options question that I wanted to get to today from Nick. I will get to that one on tomorrow's show with Larry, who does a tremendous amount of work with the options, actually doing a lot with the rewrite of the options right now. So we'll go into a couple of different things. He also told me that he has a new security to add to his portfolio. If it's Cisco, I'm going to walk off set tomorrow because every time he adds a new company to his portfolio, he added Live Nation. I despise Live Nation with all my heart. I think that they're basically high-end scalpers. Then he added Skyworks, which I had to sell Skyworks to buy my home down here in 2009, and I sold that thing for dirt cheap, and it soared. So it's one of those ones I look back and go, you got to be kidding me. It's like the day I sold that, it started to move up. Otherwise, it was just drifting down. Unbelievable. And then Cisco was my biggest intraday day trading loss I've ever taken. So that I'll never trade that one ever again. So watch. I bet he adds that one tomorrow. All right. That will do it for our show for today. Again, thank you guys so much for all the questions, all the feedback, the great commentary out there, and dealing with my wonderful illustrations out there today as Dunkster transits like preschool art class. Yeah, well, try drawing with a mouse, my friend. That's a tough thing to do. Anyway, I hope you guys enjoyed that. Hope you learned something. If you did, click that like button down at the bottom, a little thumbs up. Also, if you would like to learn more about trading and investing and whatever we talked about, I mean, we talk a lot of different asset classes, stocks, options, futures, forex, commodities, real estate. There's even information about cryptocurrencies on our sites. You can get free information at otacademy.com, but I would encourage you to click that link that's going to show up in social media here in just a second. Kind of funny I put the link out there at the very end of the show in case like somebody makes it all the way to the end. We should probably do it at the beginning. Maybe we'll get a little bit more people clicking. But that will tell you about which center is closest to you, free classes, paid classes, community events, and much, much more. Hopefully we can help change your financial future. That will do it for our Wednesday show. Happy Hump Day. Hope you guys have a great one. We'll see you tomorrow. Take care.